I'm trading a new strategy. So if you guys didn't know, I used to have a purely technical approach. I traded only technical analysis on the 1 hour chart. I'm still trading that strategy, by the way, but my main trading goal for 2025 was to implement a strategy that has a bit higher win rate and a better trade frequency. Because what is my goal as a retail trader? Well, my goal is to expand my capital. It's to get more capital, because that is the biggest issue for retail traders. They don't have enough capital. They have maybe 5K, 10K in their trading accounts, and then making 15 to 20% per year on a 10K account, it's not gonna be much. So the main goal is to get capital through, for example, prop firms. Now, through my calculations and testing, I found that the best strategy for prop firms is of course the one with the highest trade frequency, because it makes it much easier to pass phase 1 and pass phase 2, but also a strategy that has a higher win rate. My technical strategy has around a 25% win rate, but this new strategy has a 45% win rate with an average 1 to 8 reward to risk. And again, the trade frequency is much higher. I'm trading all sorts of things. I'm trading fundamental analysis and macroeconomic analysis, so I can apply that sort of analysis to things like the indices, NASDAQ, S&P 500, the DAX, gold, silver, Bitcoin, and forex. So forex is still my main focus. Most of my trades are executed on forex, but I can now also implement this fundamental knowledge on many different instruments. So I am really excited to be sharing this strategy with you guys. And in this next segment, you will get the part 1 of the fundamental strategy course. So it's a 40-minute video and it breaks down a specific trade I took on the New Zealand yen from the beginning to the actual entry and to the exit. So I used a trailing stop loss on the daily chart, which you will see a bit later. If you do want to get the full course on this strategy that teaches you everything you need to know to start live trading this fundamental strategy, definitely consider joining Zentum Trading. And I do urge you to join as soon as possible, because on the 1st of September, we will be increasing our prices. I hope you guys will enjoy the breakdown of this strategy, and maybe you can learn something new that you can implement for your own personal trading. Hello everyone, and welcome to the first video of this new fundamental strategy. So in this video, I want to give you the basics of how I'm personally trading this strategy, to show you all of the parts that are needed, all of the confluences that are needed to take a trade in the markets. Now, if you're coming from our technical Zentum strategy, so the entries are the same, the trailing strategy, the trailing of the stop loss is the same, but I am looking at the daily chart, okay, and I'm looking at fundamental analysis and the macroeconomic analysis. For you new guys that have not yet learned the technical Zentum strategy and just want to learn the fundamental strategy, well, I'm gonna teach you these concepts from zero. But in this video, just a brief overview of how a trade idea is made, so that you know the basics. Later in the other videos, I will get into detailed explanations about every single step of this strategy. So I'm gonna analyze 2 trades that I have personally taken in the live markets. The first one will be on the New Zealand yen, and the second one will be on gold. So first we have the New Zealand yen. Now for this strategy, there are 3 things we are looking at. Okay, so first we are looking at fundamental data. That's the first thing. Second thing, macro environment. Okay. Third thing, technical analysis. These are the 3 things. Now, you don't have to have all of the 3 things in line to take a trade. 2 is a minimum, but if you have all of the 3 things telling you the price is gonna go up or the price is gonna go down, then you can possibly risk more on a specific position. What do I mean by fundamental data? What do I mean by that? Well, let me show you. In this software, this is the Edge Finder software. Now you don't have to use this software, but it's gonna make it much more easier for me to explain to you guys what I mean when I say fundamental data. So this is just for an explanation. For example, this is the New Zealand economic heat map. This is for the New Zealand dollar, okay, for the New Zealand dollar. So for the economic heat map, what we can see is we're looking at the GDP, manufacturing PMIs, services PMIs, retail sales, CPI, PPI, unemployment, employment change. And you can get all of these numbers at Forex Factory Calendar for absolutely free. So these numbers are widely available for free on the internet, but they are just all of the numbers are put into one place with this software. So I'm looking at all of these data points, right? And then I'm looking to see for the New Zealand dollar. Remember, this is a reading from today. Today is the 3rd of August, but the trade I have taken is from the 22nd of May. So this is just an example. If you're going bullish on a currency pair, you want to see the data come in better than expected. So you have the forecast, you have the actual number, and you want to see the actual number come out more bullish for the New Zealand dollar than the forecast. Okay, so here as well, on the 3rd of August, we can still see the New Zealand dollar. Most of the numbers that are coming out better than the forecast, coming out more bullish than the forecast. Okay, so we are trading the New Zealand dollar against the yen. Okay, so that is a currency pair, right? So we need the yen to be weak. Well, if I take a look at the Japanese economic heat map, right now it's bullish, but at the point where I took the trade on the 22nd of May, this showed a bearish reading, meaning most of the data that was coming out for Japan, for the Japanese yen, was coming out more bearish than the forecast. So you have the forecast, you have the actual number, and most of the data was coming out worse than expected. Well, that gives us a nice fundamental contrast. So at this point, on the 22nd of May, I collected all of the data for the New Zealand dollar and I collected all of the data for the yen. New Zealand dollar, most of the data came out more bullish than expected. For the yen, for the Japanese yen, most of the data was coming in worse than expected. So New Zealand dollar bullish, yen bearish. So I was looking for buy setups, okay? I was expecting the price to go up. So because of that, my bias was bullish for the fundamental data, right? Now, for the macroeconomic environment, what do I mean when I say macroeconomic environment? I mean, what is the world doing? What is Trump doing? In 2025, Trump has been the most important person when it comes to trading. If you're not watching what Trump is doing, you won't do very well in the markets, okay? If your strategy depends on the macroeconomics and hard time frames. Anyways, so what is the world doing? What is Trump doing? Is there a crisis? Is there a trade war? Is there a real war like Israel and Iran and trade war between the United States and the rest of the world? Is there COVID? Is there a financial crisis? Is there a recession? So in what kind of environment is the world at the point where you're taking a trade? And at the point of the 22nd of May, the world was actually in a bit of a risk-on environment, okay? In a bit of a risk-on environment. We had the tariff scare for most of April, and yeah, basically for most of April, Trump put up high tariffs. Everyone was scared. The stock market sold off heavily. I can show you that if we go to the S&P. See, the stock market heavily sold off, but then we started to get a risk-on environment, okay? Risk-on environment means people are more confident. People are more likely to buy more risky assets, and the world economies are going to or are currently expanding. That is a risk-on environment. Risk-off environment means people are scared. People are buying things like gold, like the Japanese yen, so basically safe haven assets. So I determined that the macroeconomic environment on the 22nd of May was risk on. Risk on. Now we need to determine, is a risk on environment bullish for this currency pair? Well, if you know fundamentals, and I'm going to teach you the fundamentals in the later videos, if you know the fundamentals, then you know that New Zealand actually has a lot of exports, okay? New Zealand does a lot of exporting. And if the world is in a risk-on environment, if people are spending a lot of money, buying a lot of stuff, New Zealand dollar will have high exports. Meaning the underlying currency, the New Zealand dollar, will go up in value. So a risk-on environment is bullish for the New Zealand dollar, and it's bearish for the Japanese yen. Because when people are scared, when there is uncertainty, when there is a trade war, when there is a real war, when there is a crisis, when there is COVID, people tend to buy the Japanese yen. But in a risk-on environment, they tend to sell the yen, okay? So, risk-on environment, that is bullish for our specific currency pair. Now, it's important to know that, so you need to know that the New Zealand dollar is a risk-on currency and that the Japanese yen is a risk-off currency, right? So I needed to learn these things for this specific, to take this specific trade. Again, I'm gonna teach you those things later in the videos, and if you have any questions, make sure to put them in our Discord or send me a DM. I'm happy to respond. I'm happy to clear anything up. So yeah, now we already have two factors that are bullish. 2 out of 3, right? 2 out of 3 factors are showing a bullish reading. The last one is technical analysis. Now, if technical analysis is bullish as well, well, then you have a really good opportunity to take a buy setup. If technical analysis is not that great, then it's up to you if you want to take the trade or not. In this case, technical analysis was not the greatest. It wasn't the greatest uptrend, but it's still, in my opinion, was an uptrend and it fit my plan. So let me tell you why. I took an entry on the 22nd of May, but before that, I was heavily looking at this currency. I took an initial buy position here, which I got taken out of. Okay, I got taken out of this position. But I determined the price was creating higher lows. If you're coming from our technical strategy, this may seem a bit strange because you would say this is not an uptrend that I'm used to, and it definitely is not. On the 1 hour chart for the technical strategy, we're hunting for those very clean uptrends. So you need to adjust your mind a little bit. You need to adjust for this new strategy. If the market is creating higher lows, and of course, all of these concepts I will talk more about later in the videos, especially in the part about technical analysis, but the market was creating higher lows. That means the market was trending up on the daily chart. That means I was interested to take a buy setup. So I classified this as an uptrend. I would put technical analysis as maybe not completely bullish, but semi-bullish. Can we do that? So we kind of have, you could say, 2.5 out of 3. Again, it's very rare that all 3 confluences will be completely bullish, but I would say 2.5 out of 3 is enough to take a trade, even if this technical analysis is semi-bullish. And I forgot to mention, I'm starting on the daily chart, okay? So for every single trade I take for the fundamental strategy, I'm starting on the daily chart. So, basically starting on the daily chart and determining, is there an uptrend or is there a downtrend on the daily? And then I look for entries on the 1 hour chart, right? So the daily chart, I would say, is even more important than the 1 hour chart. So now we have all 3 confluences pointing that the market will move up. One more thing, you can see the 20 EMA. Okay, if you're wondering which indicators I use, I don't rely on indicators. Even if you removed these indicators, I would pretty much not even feel it. But just to make it a bit easier on my eyes, and maybe for you guys, I have 2 indicators on. The first one is the GT recent high low by Bong Hyun, and the second one is the 20 EMA on the daily chart, okay? Why do I like the 20 EMA? It just tells me, is the market a bit overextended, okay? Because I don't want to be buying here on the high. You can see how far away it is from the 20 EMA. I want to get in when there is a pullback. So I thought this was a nice area to get in. This was an okay area for me to take a trade, okay? Because we got the pullback. We were around the 20 EMA. We did break a swing low, that is true. But I thought the overall uptrend still looked okay, and we still had fundamental data which was very bullish, and the macro environment which was definitely bullish for this currency pair. So I thought this was worth taking a trade. What I then did is I zoomed in on the 1 hour chart, okay? And I found an entry. Now, I'm using the entries from the technical strategy, from our Zentum technical strategy, which if you're new, you won't know much about. But later in the videos, I will of course explain all of those entries. But if you are coming from our Zentum technical strategy, you know them. It is the flag, break and retest, reversal, and the liquidity sweep. So 4 possible entries. Let me tell you a little secret. The entry is the least important part with this strategy, okay? The least important part. You can even, if you want, have your own entry, okay? I'm just using those entries because they're very familiar to me. I can read the price action on the 1 hour chart pretty well, so I like using those entries. But the entry is the least important part. Don't focus on the entry, focus on all of the 3 major confluences that I mentioned before. This was a reversal entry. I saw a small descending channel, price reversed to the upside, some bullish pressure. I set my buy limit on this minor swing high and I got taken in. Again, if you're new, this will seem a bit strange, but doesn't matter, okay? Doesn't matter. So then I was in the trade, but you may be wondering, well, how did you determine your stop loss size? How did I do that? Well, I went on the daily chart and I found a swing low that I liked to put my stop loss below that. This was the level. This was the swing low where I thought the market will defend this level. And also, the stop loss made sense on the daily chart. You know, for our technical Zentum strategy, the stop loss needs to make sense for the 1 hour chart. But for this fundamental strategy, the stop loss needs to make sense on the daily chart. That means a stop loss of around 100 pips is not unusual. Here it was 92.8. Usually I'll take a stop loss that is around 80 pips, 100 pips, 120 pips. You know, I'm currently in USD CAD and Pound USD. Those are very big stop losses, especially I think on the Pound USD, it's above 100 pip stop loss. Anyways, yeah, stop loss needs to make visual sense on the daily chart. You're giving the trade enough room to retrace, to range around before actually committing and continuing to the upside. So if you're using a small tight stop loss of 10 to 20 pips, you're going to get stopped out 95% of the time if for this strategy. You know, you need to have a stop loss that makes sense. So I placed it below the swing low. It was around 100 pips. Visually, it was okay. There was enough room for the price to pull back. That is how I determined the stop loss size. Now, I know it's subjective. I know it's not a fixed size of 50, 60, 70 pips. I cannot give you a fixed size because every single instrument has different volatility numbers. But of course, you can ask a question in the Discord or send me a DM, give me a specific instrument, ask me, what do you think the appropriate stop loss size on the daily chart is for this specific instrument, right? So I can guide you a little bit. But I think with time, you're gonna notice, how big the stop loss should be. So then after that, I use the daily chart to trail my position. Okay, I use the daily chart. If the price does decide to go in my direction, I use the daily chart to trail it. So I placed my stop loss first below this swing low. This is also the trailing stop loss methodology we teach at Zentum Trading. But for the technical strategy, we use the 1 hour chart to trail our position. Here I'm using the daily chart. The whole point is to give the trade enough breathing room, enough room to go into a bit of a drawdown, to pull back, to not stop you out prematurely, for you to squeeze out the most of the move. Because with fundamentals, it takes some time for the fundamentals to play out. Okay, so you're gonna be in the trade for a couple of days, couple of weeks, maybe even 2 months. I think this New Zealand yen trade was lasted for 60 days, something like that. I can take a look a bit later. But yeah, you're taking positions that can last for quite a long time, but that's the whole point of these higher time frames. You want the fundamental analysis, you want your macro analysis to play out. So let's just trail the position. We created a new swing low here. Move my stop loss just below that swing low. Price goes up. Break the high, we have a new swing low. Put the stop loss a bit higher. Okay, still it's around the same level. Okay, it's a bit higher now. Let's see. Even more higher. Sorry, let's go back one candle. It's even higher. Okay. And we break the low and we retrace. Okay, we break the low and we retrace. So I got taken out for around, I think it was 3.2 R. This was a 3.2 R trade. And yeah, basically the trailing stop loss was completely mechanical. Okay, completely mechanical. Now, in some cases, I will identify a key level of support or resistance, and I may take 50% of the position off at a specific level. Also, if the fundamentals or if the macro environment drastically changes, if there's like a war or COVID or a huge trade war and it switches from a risk on to a risk off environment, I'll probably exit my risk on position. So I would probably close my New Zealand yen buy position, because then the whole picture has completely changed. And I'm talking about a drastic shift. They don't happen often. They really don't happen often. But if they do happen, I will prematurely close my position. Again, in most cases, I will just use a trailing stop loss and wait for the market to take me out of my position. So that's the trade. It lasted from, let's see, around 55 days, right? Quite a long time. Quite a long time for this trade. But it had all of these confluences going for the trade. Second position that I will break down in this part 1 is gonna be a gold buy position. So I'm gonna tell you in the later videos all of the things that I'm personally trading with this strategy. Quick summary, it's gonna be forex pairs, it's gonna be indices, US, Europe, Japan, it's gonna be metals, gold, silver, crypto, I'm trading Bitcoin, and yeah, that's kind of it. Okay, but I'm gonna give you a dedicated video of what I personally trade with this strategy. You can trade most of the things if you are proficient enough in the fundamental and the macroeconomic analysis. So it all depends on your skill level and the level of research that you're willing to do to take a position. So, and this is what a lot of professional traders do. This is the way a lot of professional traders trade. They pick pieces, okay? They try to find a lot of pieces of a puzzle and they connect all of the pieces together and they try to solve the puzzle, right? So here I have 3 pieces. And with those 3 pieces, I'm trying to paint a picture, I'm trying to solve a puzzle, and I'm trying to determine what are the probabilities of gold going up or gold going down, okay? So at this point in time, this was the 4th of March, 2025, fundamental data for gold pointed bullish. Now, how do I know that? How do I know that gold had bullish fundamental data? Well, gold is a risk off asset. Okay, gold benefits when the world economies are contracting, especially the US economy. So when the US economy is doing bad, gold should be going up. Okay, when there's a crisis, when there's a trade war, when there's a real war, when there's COVID, when there's a financial crisis, when there's a recession, gold should gain value. Gold should go up in value. So I'm again looking at the GDP, manufacturing PMIs, services PMIs, retail sales, CPI, core CPI, NFP, unemployment rate. And if all of these things are coming in worse than expected, then gold should go up. Because if all of these things are coming in worse than expected, that means the US economy is contracting, okay? And that means gold should go up in value. Remember, gold is a risk-off asset, and gold likes when there is a crisis. Gold likes when the world economies are not doing well. Again, here is a summary. So the Edge Finder basically finds all of these numbers, places them into one place, and then gives you an overall reading. But I'm using this for simplicity. These are the main things we're looking at. And this is from the United States, okay? Because the United States is the biggest world economy. It impacts every other economy, and it definitely impacts the price of gold. Definitely impacts the price of gold. So, fundamental data at that point in time, on the 4th of March, was bullish for gold. The US economy was struggling a bit. Okay, I'm gonna actually put in semi-bullish. Okay, I'm gonna put in semi-bullish. The reasoning is the US economy wasn't doing that badly. You know, it wasn't like we were getting a recession. It wasn't like we were getting some really bad data. It wasn't like we were entering a 2008 financial crisis. But you could definitely feel in the numbers, you could feel something was off. You could feel the numbers were not as strong as they used to be in, let's say, 2024. So I'm gonna put in semi-bullish fundamental reading for gold. Macro environment, on the other hand, was a massive risk off environment. Okay, so massive risk off. Come on, risk off. And that is bullish for gold. Let me tell you what was happening at this time. Tariffs. So Trump came in. He announced a lot of tariffs. He announced a major trade war. You also had Israel and Iran at this point in time, I believe. So basically, there was a lot of uncertainty in the markets. And gold loves uncertainty. When there are problems in the markets, when there is uncertainty in the markets, gold absolutely loves it, and gold goes up in value. So you can believe me that on the 4th of March, there was a massive risk off market. If we take a look at the S&P 500, we just started the sell-off. Okay, we just started to sell off on the stock market. If you're following the stock market, you would remember this data print. You know, we just started to massively drop because of Trump, because of tariffs, because of the massive uncertainty that was to follow. So, great for gold. Technical analysis. I mean, look at this chart. To me, this looked very bullish. Again, if you're coming from our technical strategy, this may not seem as good as the things we taught you to look at, but I need you to have a different approach. I need you to look at things a bit differently. I need you to be more lenient with trends, with the actual entries. You could tolerate a lot more warning signs, because the main thing with this strategy is not technical analysis. It's fundamentals and the macroeconomic environment. So we can be more lenient with technical analysis. I would say this was in a very nice uptrend. Again, I did not want to buy straight on the highs. We were pretty far away from the 20 MA. I look at the 20 MA just as a very simple gauge. are we overextended? You know, how far away from the 20 EMA are we? If we are very far away, I don't want to buy the highs. It's not the smartest thing because a pullback is very likely to happen. You know, a pullback is very likely to happen. So we eventually did pull back. We hit the 20 EMA, and when we hit the 20 EMA, let me just put in bullish here because, and I'm focusing on the daily chart, okay? I'm asking myself, daily chart on gold, is it in an uptrend? Yes, it is. It definitely is. No one can tell me otherwise. This is really nice, really strong. Massive move from 24, 45% increase. Massive. So when we did get the pullback, I was pretty confident that if I take a trade, it was gonna work out, okay? Again, nothing is guaranteed. I still took some losses with this strategy. If you want to know the stats, the win rate is around 45%, okay? So 45% win rate, average reward to risk is around 1.8 to 1, and the trade frequency maybe 1 to 2 trades per week. So this is not the holy grail strategy. Holy grail strategies do not exist, but I'm giving you a strategy that works and that has a higher win rate than our technical strategy. I wanted to start trading a strategy with a higher win rate and a bit of a lower average reward to risk for prop firms and for my psychology. This is much better for my psychology because having a low win rate with a very high reward to risk like our technical strategy, it can be really tough on the mind, and it doesn't work for as well for prop firms. This is a better strategy for trading prop firms. So now you know the stats. It's not a holy grail strategy. It's not gonna make you rich overnight. It's not gonna enable you to 10x your account, okay? But it's gonna enable you to make 15, 20, 25%, 30% if it's a good year return at the end of the year. And that's realistic. You know, most hedge funds cannot beat the S&P 500. Most hedge funds cannot make more than 10% per year after fees, commissions, and all of the other stuff that they charge. So if you can beat the S&P 500 average return, which is around 8 to 10% per year, you're already an awesome trader. And if you can make 15 to 20 to 25% per year, well, you can pass phase 1, pass phase 2 of a prop firm, and even reach a potential payout. So I'm not giving you a blueprint to get rich quickly because that's not gonna happen. Scammers will give you a blueprint of how to get rich quickly, and then you will lose all of your capital. So this is real trading. This is realistic returns. This is a realistic strategy. And again, most hedge funds cannot make more than 10% per year. But with this strategy, I'm pretty confident that you can make 15, 20, 25, 30 if you apply what I will teach you here, okay? So, yeah, then I noticed this push up, noticed the retrace. We pulled back, which means I'm no longer getting in on the all-time highs. I'm no longer buying the highs. I'm actually getting in on a pullback. So then I zoomed in on the 1 hour and I was looking for an entry. An entry finally presented itself right here. It was a break and retest entry. So very nice. This was actually very clean. This entry would work awesome even for our technical strategy. So I did mention you can take a bit of a, let's say, less clean entry. The entry is not the most important part. You can ignore a lot of warning signs with the actual entry, but this one turned out to be very, very clean. It had a clean close on the top. It had a big leg of momentum. So this was an awesome entry. I saw zero warning signs with this entry. Just a side note. Stop loss placement. I placed my stop loss below this swing low. Okay. As I mentioned, the stop loss needs to make sense on the daily chart, you know, because if you're getting in, let's say you're getting in and your stop loss looks like this. Do you really think that the market has enough room to pull back? Do you really think that is the best stop loss size to use on the daily chart? It's definitely not. So this stop loss made sense. It looked good on the 1 hour because it was below a swing low, which was here, below a significant level. And on the daily chart, visually, it looked good. It even was below the 20 MA. 20 MA is sort of a 20 MA acts as a sort of support and resistance. Okay, so kind of dynamic support and resistance, right? So when the price hits the 20 MA, it bounces off quite a lot. So yeah, just a side note. But anyway, this stop loss made visual sense on the daily chart. It gave the trade enough room if it wanted to pull back, so I was happy with it. And then that was it. I took the position. Let me show you. So this was, I set my buy limit for a break and retest entry. Got taken in, and then I almost got taken out. Price was actually really, really close to taking me out. But I have taken some trades that took me out and then went in the forecasted direction. So yeah, I got lucky on this trade. See, I almost got taken out. Sometimes you get lucky, sometimes you get unlucky. I'm gonna show you these trades, these two winners, because I think they are a great learning opportunity and I think they're good as a motivation. But I don't want you to think that I'm only taking winners. Okay, as I mentioned, it's a 45% win rate, maybe 50 if it's a really good month, but 45% doesn't mean I'm taking only winners. It actually means I'm taking a little bit more losses than winners. So make sure to keep that in mind. So for this specific example, in the live markets, I trailed my stop loss on the 4-hour chart. Now, I was still experimenting with this strategy. This was the 4th of March, so it was like 4 months ago, maybe even 5 months ago. Currently, I'm trailing my positions only on the daily chart. So yes, for this example, I trailed it on the 4-hour chart. I got taken out with this candle, but let's trail this position on the daily. Okay, I want to stick to my new rules, my final rules, you can say, after doing the live testing, after being satisfied with the live testing. So swing low is here, waiting to see price breaks the high. I move my stop loss below the swing low, below the red line. Again, this is the indicator, GT recent high low, Bong Hyun. We use it for the technical strategy. I'm using it here as well. Do I really need it? No. Is it handy? Yes. Is it free? Yes. So, whoop, was a bit fast. Price then broke the high. We can take a look on the 1 hour. Will that be too slow? So price breaks the high first and then moves lower. So essentially, if you were following this position, you would get taken out around this level. If you were too slow to react, too slow to trail the position, you would probably put your stop loss below this low. So let's say that you were too slow. Let's say you put your stop loss below this level right there. You would get taken out for around 2.81 R. Okay. So that's kind of the summary of this trade. Again, to repeat it, I'm looking at 3 different pieces of the puzzle. I'm looking at the fundamental data, I'm looking at the macroeconomic environment, I'm looking at the technical analysis, and I'm trying to connect all of the parts. So if you do some maths, you could give 0.5 points for the first one, 1 point for the second one, and 1 point for the third one. So this would again be like a 2.5 out of 3, because the fundamental data on the 4th of March was semi-bullish. It wasn't like a really, really bullish reading. The US economy was not falling apart, but it was getting some weak numbers. So I would say a semi-bullish fundamental reading. That's why I only give it a 0.5. That's why I only give it 0.5 points. Okay. Then, once you have your 3 parts, you zoom in on the 1 hour chart and you find an entry. I found a nice break and retest, 4th of March, 2 p.m. my time. I got in, make sure your stop loss makes sense, visually makes sense on the daily chart, preferably that it is below, if you're buying, it's below a specific swing low, okay? Like I put it underneath a swing low on the 1 hour, and on the daily it makes sense, you know? It just visually makes sense. It gives me a nice sense that price can pull back. Price can actually pull back, and I gave the price enough room to pull back. So yeah, and I got lucky this time. I almost got taken out. But that's how it goes. You know, sometimes you get lucky, as I mentioned. Sometimes you get lucky, sometimes you get unlucky. I had a couple of other trades in the last couple of months that actually did this and then moved up. And I mean drastically moved up. That's trading. We look at trading, or we look at our results on a large sample size. I'm talking about a year. I'm not talking about monthly results or quarterly results. I'm talking about your yearly results. You need to let the probabilities play out. Okay, so how can you get the fundamental data in the macro environment? Well, in the later parts of this series, I'm going to show you how to get a bias from fundamental data, what to look for, and how to determine the macro environment. But also, since you are a premium Zentum trader, you get access to my forecasts and you get access to our Discord. And in my forecasts and in the weekly trade recaps, I will tell you exactly what I personally am watching, what I'm personally trading, my personal opinion on different asset classes, on different instruments, and that should help you, that should give you a picture of what the fundamental data is for a specific instrument, what the macro environment is, are we risk on, are we risk off? So that should be a good help as well. So yeah, having access to my daily forecasts, to the weekly trade recaps, and to our Discord, to Griff, to me in the DMs, I think that should definitely help you to master fundamentals and the macro environment. So that is about it. If you have any questions, make sure to put it in our Discord or send me a DM. Thank you very much for watching, and I will see you in part 2.